Well, what we're seeing right now, these are preliminary numbers, so I have to keep that in mind. It's not an actual concrete earnings report. So EPS for Q2, this coming from the company, 58 cents to 60 cents. That is lower than what the street anticipated on revenues for Q2 between 5.6 and 5.7 billion. Again, this is a range that came in lower than what the street was anticipating. And we talk about Q3 guidance, also lighter at 46 cents to 62 cents. That's lighter than the street. 5 to 6 billion for Q3 revenue. They're cutting their full year guidance, fiscal 2025 to 23.5 to 25 billion. So you're seeing lower estimates or lower range compared to all the estimates. And there's one line in this press release saying that with our leading direct liquid cooling technology, over 30% of new data centers are expected to be adopted in the next 12 months. So they're saying that there's a market for it and that they're positioned for it. And yet you're seeing these estimates a lot lower than what the street was anticipating, and why you're seeing the stock just all over the place.
Okay. It looks like there's also some news that we'll be looking at having to do with private placement of convertible notes and the 10K. They're working to file that by the middle of the calendar year. So that I'm sure investors will be reacting to as well, Morgan.
Yeah, and I mean, this is a name we're seeing right now bouncing between gains and losses. Paul, I want to get your thoughts on this because Supermicro was such a high flyer, then we saw it fall so far. And some of the issues have been, I think, for the company specifically, despite the secular data center infrastructure build out and demand we see.
Yeah, so it's become increasingly competitive in the space. But I mean, broader picture, if you can't get your financials in order, we tend to stay away from those names until they can get some numbers out. And so I would just stay away from it at this point until you get to those numbers being published.